every year with the Berkshire Hathaway annual meeting, typically the next day, the next morning, there's what's called the Markel Brunch. And I went to the meeting once, and we did the Berkshire meeting, and then we did the Markel Brunch the following morning, and that was a lot of fun. Markel, they time this out to where their earnings come out generally the same basic time as well. So we'll look into their quarter real quick. Not a whole heck of a lot to dissect there, but operating revenues for the quarter of $2.5 billion were up from $1.6 billion from a year ago. Gross written premiums were $1.7 million for the first 3 months of the year versus $1.6 million last year. And the combined ratio of 95% was a little bit higher than the 90 from a year ago, but that's the nature of insurance. We always just want to see that combined ratio below 100. And over time, Markel has done a very good job of doing that. Book value for the stock, book value is now at $706.98, up 8% from $653.85 at the end of 2018. And book value, of course, is a measure we use to value insurance companies. I wouldn't call Markel cheap by any means. It's somewhere in the neighborhood of 1.5 times book. But, hey, listen, it's a high quality business. I could think of worse places to put your money. If you remember the headline a few months ago, the investigation into one of the reinsurance businesses, there is no news to this point on how that is proceeding. They just didn't have anything to release there. So nothing really to speak of there. But Markel Ventures, that wing of the business that starts they're investing in and buying wholly owned businesses there. That was up revenues $455 million for the quarter. That's really just turning into a nice revenue generator for the business. I really like it. And their investment portfolio, all in all, saw $612 million net investment gains in the equity portfolio. You look at some of those stocks that Markel holds, and Amazon has been in there for a while. It's one of the things I've liked about Tom Gaynor and team is they have been a little bit more forward-looking in that regard. Perhaps it's because they're a little bit younger, but regardless, if you look at their holdings, you see some of those tech oriented names that really have done so well over the past several years. And so I suspect with Markel, listen, I just look for the red flags to give me pause or to give me a reason not to own the stock. I don't find them in this quarter. I think, we see them keep on doing what they're doing, and everything seems to be working out well. Good company to own. I own it myself. If you don't own it out there and you're listening to this show, I encourage you to put it on your watch list. It's a nice one to look at in this environment of these really lofty valuations and unprofitable businesses. Speaking of unprofitable businesses, Matt, let's talk a little bit about Square, because while Square isn't necessarily yet to that sustainable profitability, it's coming soon. It's right around the corner. Looked like it was a pretty good quarter. Why don't you break down the latest in Square's earnings and what you see coming up for the business?
Sure. Well, just kind of on an adjusted basis, Square actually made a profit, first of all.
Yeah.
Adjusted.
Well, I made the argument for a while. It seems like we live in this non-GAAP adjusted world now. And so no matter what, I mean, you can pretty much adjust anything at this point. And it's like, hey, honey, did you take the dishes out of the dishwasher? Well, no, but if you adjust it back to do I wish I did it? Yes. So adjusted, I did unload the dishwasher, but in reality, I didn't. It does feel like we live in this adjusted world now, but I digress. Go on.
Right. Like if I ask my wife what she spent shopping the other day, she could say, well, excluding one-time purchases, I didn't spend anything.
Babe, they're all one-time purchases.
But anyway, so Square, the numbers look great pretty much all around. There was a little bit of some guidance that Square raised its revenue guidance for the second quarter or for the year, but not its earnings guidance. But I mean, just the numbers look great all around. 59% increase in adjusted revenue. Even if you back out acquisitions, it's 49% year over year. That's amazing growth, especially since it's been sustained for 5 or 6 years now.
Yeah.
Gross payment volumes up over 20%. Subscription service revenue was the big standout. It more than doubled. It was up 126% year over year. And Square said one of the biggest reasons is the Cash App, which I've been saying is the biggest growth engine that Square has, and it's going to really surprise people over the long run. The Square Capital made 50% more loans than it did year over year, and they're expecting similar revenue increase in the second quarter. So there's really not a whole lot not to like about how Square's been doing lately.
Yeah, I was looking at that myself. I mean, I agree. I think Cash App today, while it's not this big monetizable engine, I mean, it really is a great engagement tool. And I think what it does is it gets people into that Square ecosystem, and it just you're doing more with the services that they're offering. I mean, we use the Cash App for just with our daughters and paying them money for chores done or whatever. If I need to give them money for whatever, it is very seamless and easy to use. It's interesting to see. Also, as Square continues and they made the Weebly acquisition and they're going into a little bit more of the e-commerce side, they're competing a little bit more with Shopify. Shopify getting into the hardware game now as well. And we know they use Stripe as a payment provider. So it's really neat to see Shopify and Square evolving and really starting to become market leaders in obviously what is a very big market. And I noted last week, you look at Square and Shopify together, the market's essentially valuing the same, but Square brings in about 3 times the revenue as Shopify at this point. So, it's just an interesting difference in expectations there. Both very good businesses. We like them both here at The Fool, but I think that, again, you look for the red flags in something like that, and we just don't see them. So I think, if you own shares of Square, you still ought to feel really good about it. It sounds like you feel that way too.
Yeah, definitely. I mean, I bought Square shortly after its IPO, and I haven't sold one share, and I don't plan on doing it. I haven't added much just because every time I want to add, I talk about it on here and tell everyone else to add.
Yeah.
So hopefully some people have taken my advice, like back when it dropped it to the 40s late last year, when I wanted to buy it but couldn't shut up about it. So hopefully somebody took my advice.
I'm sure many did. Those pesky trading guidelines, but we have to adhere to them.